Tonight's session, we're going to look at the different stages of a arc and just talk them through again, yeah? But along the way, I would also like to do a review of what happened. Why did the trade, why did we all go short and then it turned around on us? Why did that happen? I'd like to just do a little review of that, just to talk it through, so everybody understands the thinking and why the thinking was what it was, and then it turned, and so that'd be good to spend a couple of minutes on. Then I want to, and I'll be looking at the 1 hour arc to do that. So that'll introduce us to the different stages as well. Yeah. Then at some point I'd like to have a little look at just what's going on right now with the moving averages. They've swung that push down, has swung a lot of things quite bearish. So then the question is how far is it going to go? I found another place in the pattern that looks very similar to where we are now. And again, yeah, go through the different stages of the arc, yeah. And then just a couple of other notices is I updated the server, so the sound quality is higher, more BPS or something like that, and then equally the video quality should be higher as well, yeah. As it was before. I put the sound quality up to 128, I think, BPS. So if your internet speed is a little weak, it might not come across very well. If it isn't, let me know. I can reduce it down on another session. And then also I have the push talk was enabled. I've turned that off, so when you talk, you're heard. You don't need to press something to talk, because I notice everybody's very quiet the last few sessions, and it's because that you had to push talk. You had to press a button to talk. Now the reason why that was on is with the settings is that with the noise interference. So what I've also done is that I've given everybody the ability to mute everybody else. So if we're in a session and you can see somebody's being noisy, is feel free to mute them as soon as it happens. And that'll sort that out, yeah. So really it makes it easier for us to talk, which keeps the conversation flowing. And also it gives people the ability to mute somebody if they forget to mute themselves. So we'll just see how that goes, yeah. Okay, so has anybody any questions before we start? No? Okay, so a couple of other things we're doing. I'm going to send out a form this weekend just regards with the membership and the information and the payment. So just to find out your payment date and how much it is and when it's due. And I've set up the Stripe account so we can set up the dates when they need to be processed, and then they'll be automated from then. And cancellation is very easy. It's just a matter of letting us know. We'll cancel it, yeah. Then we're looking for a name. Like a KC Trading Academy is okay. Kundalini Crypto, it's okay. Yeah, I like using that name. I'm not sure about using it as a trading academy name. So I'm just curious if anybody else has an idea. I need to come up with one soon, because I need to get logos done. I need to get artwork done, because I want to get a website built. So I'm looking at website designs this weekend, and Matt is he's a digital marketing. He builds websites, so we should be able to get it going pretty soon. Once it gets going, but pretty soon it's still going to be 2 or 3 weeks, a month, and then that'll have membership on it, and it'll have all the videos on it, and it'll be all set up like that. Crypto Clear is I don't know what way to say this, but we're putting together a course format, like a trading course format. So it just gives everybody information of the structure of what we're teaching you, and then all the details you need, and then that will layer into different videos. and it'll be just very good for you to be able to read the different steps and stages and go, okay, I've got that one. Now we've got to do this one. And it'll be very much about layering, bringing in indicators, learning them, getting familiar with them, and then beginning to layer them together and creating a structure within your indicators that you can make sense of everything. And we'll also do that with the trading strategy as well. Yeah. And then there'll be a psychology element to a mindset part of it as well. There's just the mindset of the trader as well. So we'll be getting into all that. Yeah. So that's just going to take a little longer to put together. But that's just stuff that we have getting organized. Yeah. Okay. So let's start. So let me just go back to how do we get in the hole we're in. Yeah. With regards to shorts, people who are in shorts and found themselves caught in a short so I'm going to share a screen and okay, there we go. So very simply is I'll explain it this way and then I'll talk it through. The last two drops I called, and they were very sweet drops, and I was calling them against the market. The rest of the market, or the majority of the market, weren't really calling them. So this puppy here and this puppy here, people. I was going against what the general thought was, yeah, for the most part. So what that meant was that when it happened it was a surprise to a lot of people. On this one here, it wasn't a surprise. And to be honest, I thought about it a few times and then I just let it go. And I won't let it go next time. Is that the market? I was trading with the rest of the market on this one. The rest of the market were trading on the drop as well. And that's where it changed. Okay, that's where it changed. And I think this is the 1 hour, and this is where it changed. This is the battle as I saw it. So lots of the MAs were lots of downward motion, lots of bear movement. You know, it was looking good, and the bulls would try and they'd fail. The bulls would try and they'd fail, and the bulls just kept trying and failing for lots and lots and lots. Yeah, but you could see on this phase there was a bit more of a battle going on, and but still fail. Is the one that turned it was the 4-day. When the 4-day turned and the 5 MA and the 4-day turned, that was this. So we'd had the 5 turn on the day, the 2-day, the 3-day, and still price action coming down was pushing it down. But on the 4-day it broke here. So why? So now look at this. We have the steps coming down. Here we are coming down for third spike, you know. So now when we zoom in here, I'm thinking, okay, we still have a first drop to go, and that could give us another drop. That could give us another drop down to anywhere from the mid 40s to the mid 30s, you know. But then you got this micro action here, because here it is. Here's the double top. Here's first drop. And again, because of the size of price action up to then, is that got missed. That got missed. Is because sometimes you see this drop here. That's what I thought this was. You get this little drop here, and that's what I thought this was. And then this is coming up here, and you get this before first drop. You get this rise. So you get this rise of, okay, here we go, and then no, it didn't go. I was like, okay, didn't didn't happen. So first drop still hasn't happened, you know. And then this was floating along. It's like, okay, sideways, here we go. And then for a while I thought maybe this is double top. But really it's this. This is just sideways. And what's going on here, this is why I think this happened, is there was a big liquidity pool below. We were all talking about it, yeah? And it looked good. But I think the rest of the market saw it too. So the rest of the market was planning one way, and then what I think happened is the up here liquidity pool appeared, and it started to play off each other. So the ones who were going on the there's a lot of people looking to go long here, thinking it's going to turn. Then a lot of people thought, no, this is going to go further. Bitcoin is going to go further. So the shorts started to fill up here. So I think what happened is and I'm not so familiar with the liquidity pool, so I'm talking with something I'm not. I couldn't. If you ask me what it is, I'd give you a very, very basic explanation of it. But I think what happened is that it tipped. It tipped is there's a big liquidity pool down here, but I think a juicier one appeared here. All the people that were piling in for the short. So now this is where the battle happened, is that it came down here, and you know, and then this sideways action is the pull and push of this battle. Which one of them is going to win? Is it going to take its drop and do a decent first drop, or is it going to come up and go to mountain peak? Because it could do first drop and then go to mountain peak. It was always going to go to mountain peak. It's just a question of where's first drop going to go to? And I think that was the battle that was lost. Is first drop, you see here, is rather than first drop going below third spike, first drop became a 1-2 of an Elliott wave. And that's when the battle was lost. So that it didn't drop below. And I think that was where I got caught anyway. That's where I misread that, and then I saw the sideways. So I said, okay, here we go, up it comes. Okay, now it's going to come down. No, it didn't. Okay, still sideways. Okay, up it come again, because you get that lift up before you get the drop. Even if it's here, look, lift up before the drop. It's just because of the size of this, I wasn't equating this as the real thing. You know, I had a bigger expectation. So now it comes up to here, and I go, great, here it is now. And I think there was a couple of people, including myself, commenting, get ready now, here we are. And then it turned into something else. It came down here, and we're going sideways, and all of a sudden it was up like this. And this started to pump up. I said, oh, this is something different. And by that point, it's like, oh, this is heading up to mountain peak. You know, and then I was back into a dollar cost battle, so to speak, in the sense of having the dollar cost to push it up. So that's the story as it got played out. This is where the challenge with reading the arcs is difficult. Is this here is recognizing this as first drop can be a challenge at times. So there, and then this here is this went up mountain peak. Like it went right up to the resistance peak, and again with a bit more volume than normal because of the downward motion. Is mountain peak wasn't coming up as high. Like mountain peak was doing like a mid-range or slightly higher or even slightly lower. Mountain peaks weren't coming in with that volume. Where this one here is, look at that, right up to resistance peak. Like these are the levels that you get mountain peak at when you're in the bull run. In the bull trend, mountain peak likes to come nice and high. So so that was it. That was where also the anxiety and the stress came in, because like, Jesus, is this going to keep going? This is going to keep going? And again, is it going to turn and bounce up like this? So I saw another part of the chart. Where, now can I see it here? Let me put these. Where's the part I'm looking at? Where is it? Sorry, I'm gonna change. I'm gonna pull out another chart because I was looking at on another chart and I can pick it out on that one easier. Can you bear with me one sec? Is it this one? Okay, yeah. Okay. I'm going to drop this chart in now. There we go. So this chart. So last night I was equating this to that, and for good reason. For good reason, yeah. Is I'm very much it could be absolutely still that we can get a. I know there's going to be a retrace here, and we're going to retrace and come back down. So definitely there could be a strong push up here, and we get our final push down, and then it goes up. We absolutely still in that zone. But then I'm looking at this one. I'm looking at this here, and I'm going, look, it could be. I still think we're going to head up rather than down. But this one here has a much deeper drop to it. So now I think it's possible that we're probably going to come down for a deeper drop, deeper than this. In fact, if you look at it, even just to your eye, you can see. Even just to your eye, there's the 236. We're here. Look, we're already halfway to the 05 already, yeah. And you can see that the price action is going to keep pushing. So for sure, I'd say we're going to be hitting. Looks like we're going to hit with the 05 for sure, you know. Anyway, I don't want to be getting into that, but anyway, so that's basically what I'm trying to say here. Is it looks like anybody in the short hopefully is in a position that they can get out of the short without taking much of a loss, or no loss at all, one or the other. And then again, it's back to we're resetting and reviewing, yeah. So that's what I think. That's where it all played out. One of the things I'm taking from this is I ended up syncing with the market. This is where one of the red flags for me is that I was going against the market when I was calling these, you know, where I was going with the market here, and I could feel that, and I everybody was talking about it. So when so many people are piling in, that's when the market makers make their move. The market makers make their move when everybody thinks it's going one way, is they'll switch it and have it go the other way. So that's where they put their finger on the scales. And they're the perfect times to do it. When you get a large amount of people all thinking it's going one way, well, that's the time to put the finger on the scales. So just from a sentiment point of view, I find myself in that position again. Is I'm going to be just naturally more cautious in those moments. I'm far more comfortable when I'm calling a trade that's going against the general market trend or interpretation, because it means there's less people going in on the trade that I'm going in on. So it's less likely to be manipulated in the sense of the market makers just, you know, switching it up, so to speak, you know. So has anybody any thoughts on that? Because I wanted to have this chat because I think it's important to have that clarity and just a review of it, you know, and make sure that it's like what we don't want to be on is hopium. We don't want to be trading on hopium and then all of us sort of talk into a hopium bubble where we all convince ourselves that we're in this hopium bubble and it's going this way. Is like there was very clear there's very clear reasons to go into those shorts. Is and then it switched. It switched.
Now, can I say something, Roy?
Yeah.
Like I'm one of the lucky few. I'm in the green now.
Yeah.
And I'm in the green because I went in again. I went in. I think it was. Let me check. I went in at about 65. I actually posted when I went in, and I followed it up, but I went in small.
Yeah.
And I'm so from 65. I have an entry point at 78. I followed it till 78.
Very nice.
So, like, we can win these. Like, even if
Absolutely, yeah.
it doesn't go our way, we can still win these if we go small and we dollar cost in. I dollar cost in almost like every 3, 4, 5 points. Yep. And like that made me move with the market.
Yeah, I think it's one of the things we need to sort of double down on with the live sessions, and really begin to refine that for people, because there's an awful lot of adaptability in the dollar costing. There's a huge amount. I was saying to O'Neill earlier on that remember doing the bot trading. The bots could move the liquidation point 60%. So there's a broad range that it can move in, and then I'll relate that tonight to reading the patterns of the arcs, but then also it's the confluence that gives you confidence to go in on a trade, to trust your dollar costing, and then to stay in it, to play it out until it turns your way. I think that's part of the challenge as well, is staying in the trade, knowing how to be in the trade, how to trade the trade, and how to traverse it when it's not going your way, and having the skill, the knowledge and the skill and the wherewithals to, as Mihaela said, or Crypto Clear said, is turn it into a win. So yeah, for sure. Okay, so let's have a look. Let's have a look at actually here as well. Sorry, I'm back onto this now, yeah, because I'll tell you what I'm watching here, yeah, and it repeats itself all the time. So here's Skyline at the top. Is the first drop down is like it's called dead cat bounce. It's like the dead cat of a bounce, and then you get this here. This is resistance peak. The first retrace, proper retrace, is resistance peak. So now, sorry, dead cat bounce, first spike. So that little drop here, dead cat bounce, and then first spike. This retrace here is resistance peak. Is you get a drop down again. Is there's always a retrace, because this is also a 1-2 of an Elliott wave. So excuse me, it's also an A, B, C, but it's also an Elliott wave down as well, an impulse down. So this is 1 and this is 2, and then there's the push away, and there's always the retrace. So here's resistance peak. Here's second spike, which leads into mid-range high, which is always the main body. That's how you know mid-range high as well. It's always the main body of the movement. But now watch this. 1, 2, a push away, sideways, a drop. So second spike. So now I'm looking at this as an Elliott wave. So there's always, after 2, there's that push away, the impulse away. Here is the W. So I'm looking for the W. There's a drop. Now what I'm looking for is 3 scoops. 1, 2, 3. Now look at this. This is 3 of the Elliott wave. So 1, 2, 3. So now there's always a bigger retrace here. 4, 5. And again, that's why I'm calling this third spike. You know, I was looking at it going, did I get this wrong? Did I mess this up? Should this be first drop and this be third spike? And I go, no, this is a proper Elliott wave, nice and clear, nice and succinct. It's showing itself very clearly, and all the different steps in it are there and clearly there. So there's always this down, is it's nice and clear now. It's on the 1 hour and it's actually nice and clearly red. If this wasn't so clear, because sometimes they happen much faster, there's a lot of detail in this, is I will look on the, while I'm on the 1 hour arc, I'll put it down to the 15-minute to look for that detail. I'll look for that detail if I need to find it, yeah? So, so now here's an Elliott wave up, okay? And again, it's going to be a peak here. It's going to be an ABC correction down, okay? But equally, it's going to be an Elliott wave down. So one of the things I'm looking at here is, again, is 1, 2, the push away, and again there's retraces within that, the push away. Now I'm not so sure about this being the W. I'm not so sure about that. I'm waiting to see. If I go down into the 15-minute, is the 15-minute, see, the 15-minute gives me more detail. So 1, 2, the push away is that there's not a W. Maybe this is a W. Maybe this is a W here. Is possibly the scoops 1, 2, 3. Okay, so maybe that's what that is. How will I know? Maybe there's another scoop coming in here, and that would give me a greater confidence. 1, 2, nice and clear. But what am I waiting for? That'll give me a nice solid indication that that 3 is in. Is there's going to be a retrace. There's going to be, go back to the 1 hour. There's going to be this. So whatever it is, whatever 3 is, there's going to have to go to 4 and then 5. So this is where I'm watching this, is I'm following it down, trying to read it. You know, I'm looking for the W, I'm looking for the 3 scoops. But also is that I'm not stressed about here and the limit, because it has to have a 4 and then come down for 5. Now 5 might only come down and be like a point below this. 5 doesn't have to come down very far, but it will come down below this. So when you get a nice clear retrace, that's obviously 4. You know, and again, I go into the detail and I'll look for the detail, and I'll see if I can see my W's and my scoops, you know, but then there's 4, wherever it is, and then there's 5. So that's what I'm looking for. How far will this get down before it gets that pushback, and then it comes down for 5. And when it hits 5 here, again, I think it's time for, whatever here is, I'll be looking to take, I'll come out of the trade, yeah. It may do a 3, double top, first drop, and come down even more. I'm not willing to risk it. I'm not willing to risk it. I want to see 3, 4, 5, and wherever that lands, I'm out. If it comes down more, I don't care. I'll just be happy to get out of it then. I'll take it on the chin, and I'll manage my risk a little bit more next time. So that's what I'm looking at, yeah. So there's another point why I'm making this is this is not rocket science. Okay, and there's a fine line between keeping things simple and overcomplicating it. you don't want to overcomplicate it. So all your indicators, they have to be entwined with each other. They have to be able to dance with each other. And not dance with each other and agree with each other, but dance with each other as you're able to read each one of them and read them together. And if there's confluence, great. If there's divergence, well, then you have to check on that. Is that if they're giving you two different things, well, you have to question that. And you'll even notice that in the last couple of sessions with me, I was a bit like trying to feel my way through it. So you might have thought, he's after saying contradictory things there. I did, because that's what I'm reading. I'm reading, one is telling me this and another is telling me that. So you got to give yourself permission to let your indicators tell you what they're telling you. And then you're looking for confluence, but you're always looking for divergence as well. Where do these diverge from each other? Where do they separate? And then why are they separating? So you don't want to overcomplicate that, because let's say you're going to use 6 indicators. If you're overcomplicating it on 1 or 2 of them, how are you going to manage 6? And how are you going to read 6 together? So you gotta be able to simplify the complicated without losing the quality of it. And why am I saying this to you? Because look, here's where the arcs come into their power, yeah? There's a 15-minute. I keep repeating this, but it's within an hour. That's within a 4-hour. That's within a daily. This is the one we're going to study later on, by the way. Can't copy this now. There we go. That is within a weekly. Okay, so now what's my point? Is once you have your arcs mapped out, okay, once you have your arcs mapped out, you got to really take on board what I'm about to say. And again, there's always a testing of your arcs. You want to make sure they're correct, and there's a measuring of them as they go along. So it's not like they're super simple, because you got to map them out. You got to read them, and sometimes they're difficult to read. They're frustrating at times, and you have to reset yourself in them. That's part of it, but you got to do that anyway, no matter what you're doing. But here's the point that I really, really want you to take home. Do you see this weekly arc? Do you agree with me that price action truly belongs in this pattern? There's a new one I'm playing with here. Is price action, there you go, price action truly belongs in this. And let's say we were here at the first wave of it, and it gave us our top here, and it gave us a bottom, and we were measuring it out a little bit. It gave us a bit of space. Would you agree that if this is the top and this is the bottom, that the rest of this arc is going to play out in this? Do you get what I'm trying to say? Do you agree with me that if we get the big pump first, because there's always the big one, we know there's a smaller second one, possibly even a third one. Look at, this is the weekly. Look at that for rejection on the weekly. Look at that for rejection on the weekly. Look what it did there. Look what it did there. 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 So, see, this is where I start to think, are we going to go down to, are we going to go down? Is it going to take us down to 56? Is it going to take us down to 35? Like, that's a massive rejection. Crypto Clear is, what would you say about that rejection? Look at it. There's a similar one there. What would you say about it? what would you expect from that rejection normally?
I would expect it to go down to the bottom of the arc, at least 56. However,
Yes.
there will be, like, there might be news, like there's momentum built for longs at the moment. So I'm not sure how, like, have to check to see when it reaches 70. If it breaks through it,
Yeah.
then the next step is around 55.
Yeah.
If the momentum is exhausted by the time it gets to 70, that might be it.
Yeah, well, I know there's a massive liquidity pool down here. It was 27 million last time, but I think or billions, probably more now.
The thing with liquidity pools is that they can come back after them whenever they want to. So the market maker can leave that liquidity pool there and go for another one that's formed. So if the longs outweigh that one, they will start. If the shorts start piling in, and them longing would give them more liquidity, they will go for that.
Yeah,
because they can always go back for that.
But do you see this? This has frightened the shite out of all the shorts. See this here? This has wiped out so many shorts. It's everybody's back. I think everybody's backing out the shorts now. I think this is frightening a lot. This loads of people got caught here. So if all the people got caught here, where's the next set of people to get caught? Anyway, I just think 56 would bring it down here but not break it. And it's the bottom of a long-term trend line. So I think 56 is a natural target there. And it would be 1, 2, off to the races we go. It would be beautiful. So it fits perfectly. But anyway. So my question, I need you to really take this on board. If you have this, and you know every arc, there's the waves to it. There's always the big one at the start. So do you agree then that the rest of this arc is going to play out in this space? Okay, if you say yes to that, great. What that means is you also believe it has nothing to do with this. Now there might be a bit of movement on the line here, but it has nothing to do with this. There's nothing to do with this. So any indicators that are giving you indications outside of this, you can dismiss them straight away. You're only working within this space because the markers, the top and bottoms are set, and it's giving you indications. And again, you may have to move some lines, but nothing up here is relevant. Nothing up here is relevant. So you don't get caught up in that. You don't get distracted by that. So all those possibilities that could be here, you don't entertain them. All you're doing is wasting your time and energy, and it's a distraction. Do you agree with me? It's really important that you understand this, because what it does is that it begins to reduce down your options, and it reduces down the options of price action. So for a million places it could go, it's actually only going to go to one place. So if it's only going to go to one place, and this is actually a really good question. If it's only going to go to one place, how many options should you give yourself? How many options should you allow yourself to have? Well, there's at least two. There's an up and a down. Okay, so if there's an up and a down, within that is how many options should you give yourself? 3, 4. And the reason I'm saying this is that if you say, oh, I think it's going to go down, but then you start giving yourself 4 or 5 different options. What are you doing there? What mentally are you doing there? What's happening? Essentially, you end up distracting yourself, playing the guessing game. So what you're looking for is a range. So it's either up or down, and then within either one of those choices, you're looking for a range. So you're looking for a space that it's within. So now you've got 2 choices, it's up or down, and after that choice, there's a one range within that you're looking for, and that's it. And when you start to localize, when you're looking at all your indicators, it will give you ranges within that. So it's not going to be 101 things. So you need to keep the simplicity of that in your mind and not to be getting caught up in 20 different possibilities, because it's all just a distraction. And it just feeds into keeping yourself busy. And people have a tendency to get over busy. One of the things is get over busy doing their TA, looking at so many different options, where really it's either up or down, and then it's within a range up and down. And that as you refine it, your indicators should be demonstrating that range to you. Or you'll get confluence, or you're going to get divergence. And then you have to check why is the divergence? Why are you getting two indicators that are too far apart to be in the same range? Why is that? Okay. So now you know that price action is going to play in this here. Even if look, this hasn't shown itself yet. This hasn't shown itself yet. Let's say you might be on this candle, this hasn't happened yet. So, but you know that the wave is like this. You know it's like that. So you could give yourself a little bit of space and go, look, if I put a fib on this, and I go, as an estimate, where's Mountain Peak going to go? Or, I'm looking at above the golden pocket, 702 to 786. So you might put it at the 786 and go, okay, it's most likely going to be within the 786 or below. So you know that range. So it's not going to be above Skyline. There's resistance peak. Most likely it's not going to be above resistance peak. It might come close to it, but generally it won't be above it. And definitely Skyline. Very seldom does price action come to Skyline. And in this part of the market, you get Mountain Peak coming up to Skyline sometimes. This is the place in the market where sometimes it happens. But outside of that is it doesn't. On the flow of the bear or the bull, it doesn't do it. It comes higher on the bull, and it goes lower on the bear. Okay, but you know that it won't break this. So as long as you're in this arc, is Mountain Peak won't break Skyline. The odd time you get a retrace and a breakout, like where we are now, is a potential of it turning into a bull flag. So, and you'll see when we get proper breakout, we're going to have arcs that are like bull flags. That's the time where you get Mountain Peak, you get a retrace, and then up it goes. But that's the phase of the market, and if you know it's there, well, then you plan for that. But the point I'm trying to make is that is when you're in your arc and you've got it mapped, and you know you've got it mapped, this is why this is a really nice place to trade. The Skyline down is a nice place to trade. is the middle of the arc is the nicest place to trade, because you know the range you're playing in. The breakout can be a challenge, but once you catch it, this is why I like to catch. If I think it's going to go down, or I know it's going to go down, I like to go in here so I can relax and just let myself enjoy the breakout, rather than trying to catch it on confirmation. Equally, if it's going to break up, is I will look to go in on third drop or final bounce. Catch it there, and then relax and just let it go up, rather than trying to catch it on the confirmation of the breakout. But that requires confluence. When you're confident in your confluence, you can do that. So, and it really supports dollar costing in. But the point I'm trying to make to you is that if you can begin to really get it into your head that once you have your arc mapped out, you know the space that you're moving into. So it's not above this. It's not below that. So now, look, here's your bottom, here's your top. Price action is within this range. And what's happening to it as it goes along? It's getting tighter. It's getting tighter in that range. So that simplifies things. That doesn't complicate things. That really, really simplifies it. That's the point I'm trying to make. So now, within this, what do you have? You have an Elliott wave. You have an ABC correction. You have an Elliott wave, an ABC, possibly another one. So you have 2 to 3 Elliott waves, big ones, and 2 to 3 ABC corrections. So you'll have, and your breakout is either going to be on an ABC or an Elliott wave. It's one or the other. So you can begin to map that out and time that. You can read it. So whatever the last movement is in your arc, the next one is going to be your breakout. So you could have an Elliott wave to here and it peaks here. What's going to happen? Well, now we're going for ABC. Okay, so we're breaking down. But my point is, within the arc, you have Elliott waves. And I know there's all types of counting on the Elliott waves, but within the arc, you can keep it really, really simple. It doesn't matter. It doesn't matter that there's an Elliott wave count that's going all the way up here. It doesn't, excuse my French, it doesn't matter a fuck. It means nothing because you're mapping this out. So you're getting Elliott waves that are talking about this and talking about that. Doesn't matter. It really doesn't. The one that's relevant to you right now is this one. And this one's really simple. And this one's really simple. And so is this, and so is that. That's it. No biggie, no big surprise. Is with your confluence, your bigger Elliott wave is now, are you going up or are you going down? That's where it becomes more relevant. But when you're in this and it's set, is you can relax into this and then just work the Elliott waves within this. And what do you know about those Elliott waves? Is they're coming into volume that reduces, that consolidates, that breaks out. Volume that reduces, that consolidates, and breaks out. That's it. Now, how do you measure this? Well, look, there's natural support and resistance lines. So you layer in your support and your resistance lines. Straightforward. Look, there's going to be channels in it. Well, okay, put your channel in. Okay, there's going to be fibs on it. It's an Elliott wave and a correction. Stick your fibs on it. See where it's going. Let the volume guide you to where it's going to hit. But now all your indicators, again, lots of information, being kept simple. Is all the information that you're looking for is within this. All your indicators are working within this. And all your indicators are helping you map it out. And what do you know this is? It's an Elliott wave. It's not a secret. It's an Elliott wave. It's always an Elliott wave. Oh, what's this one coming down? It's an ABC correction. But an ABC correction also has an Elliott wave in it. So you can map it out as an Elliott wave or an ABC. Doesn't matter. So, but it's simple. Is it always easy? Is it always easy to read the Elliott wave? No, it's not. No. Okay. You gotta go quiet there. There we go. So, oh, wrong one. Where is it? Here we go. So now, is it always easy to read the Elliott wave? No, it's not. Sometimes it's fucking messy and it's, you know, you're missing peaks and you're misreading peaks. That's the worst case scenario. You misread the peak. That's it. You get the peak wrong. It goes up more than you think. Your dollar costing in should keep you, look, this is it. Your dollar costing, you can dollar cost for a lot. You can do a big percentage dollar costing. You miss a peak and you can dollar cost, it's only an opportunity for you to pull your entry point back. Go higher with it or go lower with it. But look, there's the bottom of this arc. Here's the entry point. So if you went into any trade on this red line and you pulled your liquidation or your stop loss down to here, how many times are you going to get stop lossed out? Read it yourself. How many times are you going to get stop lossed out? The answer is 0. Look, if you get it wrong here and you go for a long and it goes short, okay, well, you get caught there. But look, you don't get caught 0 times. Now here's Skyline. Okay, and here's the turns. You catch the turns and you pull your stop loss or your liquidation point up above Skyline. How many times are you going to get knocked out? How many times are you going to get knocked out? The answer is 0. 0 times. Again, unless, you're going short on the end here and it turns goes long. And you see that, look, if it gets up here, it's time to come out. But you're dollar costing in, so you've measured your risk. So 0 times. 0 times. This is the first trade in, I think, 3 or 4 months where it's costing me. Because I've been doing the same strategy. 0 times. It's that simple. Can you get your arcs wrong? Yeah, absolutely. They're sometimes they're a struggle to read. Again, but your dollar costing protects you while you map it out. So now you've got your support and resistance, you've got your channels, you've got your fibs, you've got your Elliott waves and your ABC corrections, your liquidity pools. Again, if you're using them, I could put in a bunch of moving averages. I could put in a bunch of other indicators. There's lots of them, but the point I'm trying to make is they're all within this range. There's nothing to do with outside of it. And once you start mapping it, you can settle into knowing the space you have to work with. And then when you know your bottom and your top, if you're smart enough with your entry points and your dollar costing, always make sure that you can put your stop loss, your liquidity above Skyline or below the entry point, the breakout of the previous one. That's it. That's it. It's really simple. It's very uncomplicated. It allows you to take a huge amount of information and simplify it and integrate all your indicators and relax into it and enjoy your trading. Unless you read it wrong and you go in a short. You go in a short when it goes long and you got to go deep. And again, that's a lesson in itself. So has anybody any questions? So now I'm going to ask you, tell me how important the arc is. Tell me how important knowing this is to your overall strategy. If you take this out, there you go. Look at the difference. Look what that does for the potentials. Oh God, it could go up here. Jesus, it could go down there. Oh, it could go up. It could go everywhere. Could go absolutely everywhere. All of a sudden, now you're looking at all these potentials that are just not relevant. They're just not real. You're wasting your time and your energy. You're distracting yourself. Okay, that keeps it nice and tight. Now I can just work within this range. Everybody get that? World of difference. A world of difference. So they're worth properly understanding. When you begin to layer them together, now there it is there. I've had this one. No, it's not. Or is it? Yes, it is. Yeah, yeah. This one. This is one I've been having. I did there recently to basically just keep my a bit of mind mapping. It just lets me, like, here's the arcs from the 15 to the hour, to the 4 hour, to the day, to the week. Here they all are together like this. And it just gives me, it allows me to just look at the confluence of them all together. So it lets me look at them. So here's the 4 hour, you know, I'm going to move this now. Okay, so you can see the 4 hours in the descending wedge is, again, potentially, is we're looking at the hour. Look at this here, is now how far down is it going to come? Like we're looking at the 15-minute being potentially a bull flag. You know, depending on, again, how far it wants to come. So it wanted to come down and do a 56. I'd say we're probably, yeah, anyway, well, don't get caught up now. But you get my point about you look at the mind map that you have there. Look at the mind map. So now the same conversation about the weekly. Price action is moving within this range. Okay, right, that's a lot. Great, but I want to trade the smaller time frames. Okay, but then look at the hourly. Price action is moving in this range. Okay, well that reduces it down a little bit more, but Roy, that's still too big. I want to trade smaller. Okay, well look, here's the 4 hour. Price action is moving in this range. Okay, that's really honing it in for me. But listen, I actually want to trade smaller. Okay, well look, here's the hour. The hour is trading in this range. So this is the only range you got to think about. Okay, Roy, yeah, well, you know, I want to trade smaller. Okay, well look, the 15 minutes in this range. Okay, now you're really beginning to localize it. You know, and then you can zoom in and look, there's the 5. There's like a sneaky few 5 minutes in there. Is like I want to trade the 5. I want to scalp. Well, look there, go into the 5 minute. It's the same thing, but you're only within this range, and then you're in this range, while this arc is going on. So it makes it really clear the range that you're working in, and then all your indicators within this and supporting this. I know I'm repeating myself because I just have to until you get it. An Elliott wave, correction, an Elliott wave, it might be a correction, Elliott wave, and again up it goes, or MAs are sort of suggesting it could be something bigger. So, but we're mapping it out. This is the point I'm trying to say to you. There's the 15 minute for now. We're mapping it out. Here, if you look at I was actually doing this earlier on the hour, is because of the price action here on the hour, there's a natural now somebody has to quieten themselves. There we go. There is a natural because of the touch points. I'll actually go into the errors. I'll show you this now. This is the error. I have to get all these out of them now. There's all the previous hours. So now this is what I wanted to show you in this, yeah. So with the previous drops on the hour, is look what it's provided to us. When I put when I put B here, and I put it in line with this, is there's a natural drop line here. There's a natural support line. So even in this natural support line, when you look at it like this, as in it connects 3 points, yeah, nearly 4. Is it could nearly tell you, look, there's a 63.34. So that would be a natural divergence line. So if you saw a price action breaking down below this, it's most likely we're heading for a breakout. You know, not necessarily come down straight like this, but you see it play out. You see this line being broken, you know, and then you see it being broken proper. That's the breakout. But it's also a target. Also a target. Also a nice indication of potentially where the price can come to. 63.34. And would you believe my entry point is 63, I think 29 or something, which would be really sweet for me. And there it is. Look, hit the golden pocket here. Do you remember I was saying on my thing earlier on is that we want to see it break the golden pocket, get down to the early 70s or so that when the retrace comes in, it might come up and bounce off the golden pocket at the top again, and then come down again. And again, if it breaks here, coming down to the 702, at 66.93, 66.67. Might even spike through, give us a couple more points. So, okay, so now we talked about one of the other things we're going to do, and we're going to do this. It's just we'll do it this week. Is we're going to change the channels from coin channels to trading channels, because I think that's going to really help things. Because the scalpers, short-term traders, and the swing traders is two conversations, two different strategies. There's nuances within it that are different. So the scalpers don't need or want the medium to long-term trade. They need to keep their eye on the trend, but they don't need to talk about it all the time because they're in that small time frame. Once they know the trend is up for the day, that's all they need to know, and then they're in on what's happening on the next 5 minutes, 15 minutes, hour. That's all they need to know. Swing traders looking at what's going on today, tomorrow, the next day, looking for the trend, looking for the divergence of the trend, the swing, and then we go in on the swing. So they're different conversations, different strategies. So this week we're going to separate out the channels to have them as trading channels rather than coin channels. So then there'll be no more Bitcoin, Ethereum, and XRP channel. There'll just be a scalping channel and a swing channel. And then all the trades that we'll do, all the coins will be into one channel. So we'll be putting in Bitcoin, Ethereum, XRP, and any other one that people are trading together. But it'll be all swing or all scalping. So we're all having the one conversation, and hopefully all beginning to practice the one strategy with regards to dollar costing, and making sure that we very seldom get caught. We very seldom get caught. And that when we get caught it needs to be a biggie, because we can dollar cost and protect ourselves, and 9 times out of 10 is, even if we've got to go in and go in a little bit into the red, our dollar, we can wait it out, we can trade it out. We learn how to trade our way out of it. And very, very seldom it's going to go to that 50% mark and get knocked out. And it may be, if it does, we get hammered with one, we lose one, and it hurts. But if we're managing the risk, is having one of those happen every now and again, it's part of the game. And the wins are going to far outweigh the losses. So I personally really want to tighten up with everybody on that and get everybody working with precision and focused, and sticking to the formula that works and works really, really well. And all the indicators that we're using, we're gonna work them within the arc. It has to be in the, because outside of it doesn't matter. So only what's in the arc, only how this indicator relates to this arc in this space, in this time frame. Outside of that, when we get to that space, well, then we focus on it. But we're not there yet. So, and that would be super. And then the same with the scalping is have that nice and cohesive as well. Have that backbone within it as well. So okay, so let's now look at
Roy, before you change,
yep.
For these new channels,
Yeah.
does it make sense can you have sub channels within them, or is it just going to be one, one channel for all the coins?
Yeah, we're thinking it through, and you could like one of the thoughts was, well, look, you could do a swing channel for Bitcoin and Ethereum, and each coin can have its own. The main three anyway could have their own swing trade channel and scalping channel. But then what's happening is that we've got loads and loads of channels, O'Neill.
Yeah, true.
Too many. And to be honest, is maybe we will end up going that way. But it's a small group of people at the moment, and the strategy is the strategy. So I don't think it's distracting if there's people posting different coins, but they're all posting in the same format, in the sense of we're swing trading, we're working on the arcs. Is if you're trading on the hour, that's what you post in. If you're trading on the 15-minute, well, that's what you post in. It's much. I could follow 4 or 5 different coins in the same conversation because it's so cohesive and focused. But if you start throwing in conversations about things that are outside the arc and other indicators that are telling you this and that, but they've nothing to do with what's inside the arc, but then I'm getting distracted. Then if we have a load of scalping stuff going on, is think about a swing trader talks at 5 miles an hour, a scalper talks at 20 miles an hour, because it's that bing, 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 bing. There's more going on for them in a day. There's more engagement in that way. So now that would pull up my attention. That would then be chaos for me very, very quickly. But not if we're only having one conversation. We can be talking about 4 or 5 coins, but we're only having one conversation. And that's where we can make the complicated simple. What sub-channels were you thinking about, O'Neill?
No, I was just thinking, if you have if you're splitting it into two, where you have the long term and the short term.
Yeah.
For the long term, within that channel, I don't know if it allows you to do the same structure of Bitcoin, Ethereum, XRP, and alt. So when you go into the what we talk about long term, it then breaks into 4. Or if that's too complicated and it's all
no, it's not. Yeah, I can see it. I can see it developing that way. Like the scalping will be anything from, like, a real scalper is doing 10, 20, 30 trades a day. You know, is if you're doing one trade a day, it's not scalping. That's swing trading. You know, so scalping is when you're in, you're out, you're in, you're out, you're in and out. You might be looking to get, like, even if you're doing 5 or 6 trades a day, you're in and out and you're in or out. Like that's scalping. You know, where swing trading is anything from you're going in on the swings, but your trading might last a day. It might last overnight. It might last a few days. If you're going into weeks, then we're going into longer term trades. But those longer term trades they're things that you can have within the shorter term swing trades, and it's the same process. It's just happening slower. So once you're in the trade, you're sort of just nurturing it along, if that makes sense. So that with a small group that can fit in, and there won't be an issue at all. You know. Is that part of what you mean?
Yeah, I think I was more talking about the organization, the organizing of these channels of where they open up and it's something within a sort of a directory within a directory, but it's all in let's just see how it works, how you give it. If there's any problem, I can give, we'll give feedback. I'm sure whatever you use will work.
Yeah, of course, yeah. I think what will happen is that the Bitcoin chat, the Ethereum chat, I think those channels will start to pick up, because if you want to talk specifically about a coin, you can talk about it there, if that makes sense. Like, there's the Bitcoiners and the Ethereum heads, like you can be having your conversations there about your particular coin, but when it comes to the trade setup and that's where the business end of trading happens, is we're all in the one conversation. Like if you're trading, like it's really simple. Like let's say there's 10 people trading Ethereum. Like you're either going to be trading on the 5 minute, the 15 minute, or the hour, or the 4 hour. Like you're either trading on one of those. And the whole conversation is going to be about confluence anyway. So if I'm trading on the hour, I'm still looking at the 15 for detail. I'm still looking at the 4 hour. I'm still looking at the daily. I want to know the trend of it. So do you get what I'm trying to say? Regardless of what timeline you're trading, you still need to know what the others are for confluence. So it's the same conversation.
Oh yes, of course. I hear you.
Do you get what I'm trying to say? So it would, yeah, we got to feel it out though. You're right about the how would it work? Yeah, we gotta. I think maybe one of the things, O'Neill, is there. I'm going to be really blunt about this. There'll be a lot more discipline to it. Like I'm going to be a bit tight about it in the sense of there's something I want to show you something, and then I want everybody to figure out how to work into that to trade really well, to become successful traders. So if people are putting stuff in that isn't matching what we're doing, I'm going to give people feedback. And I'm not going to be an asshole about it. I'm going to talk to people, explain. It'll be a lot of explaining and communicating, but it'll be it must fit in. We're doing the arcs, and your TA must fit into the arc. What are you trading now? Fit it into that, and how do you make it fit? And any indicator we want to bring in, how does it fit into the arc? How does it make sense? Because this is our center. This is my point of focus right now. I am centered on this, and I am working within this range. And that's all I'm doing. So anything outside of that doesn't matter. So what I really want everybody to do is to practice centering themselves in their trading and focus themselves and really start to now refine. And it takes time. Like you guys, the guys that have been here now 2 or 3 months, you can see how you're refining more and more over time. We just got to go to the next level. But that means staying focused and putting it all together and really, really making that work for you, so that you don't lose your head. So that you learn how to stay in a trade and trade it. And that you use your indicators and you use a strategy to do that. So you have to learn now how to stay in a trade. If you want to start swing trading, you have to learn how to stay in the trade longer. And that's it. That's a skill in itself. But that requires discipline. That requires focus, and not messing around and keeping it tight. Is you can't be half here and doing that. It's not going to work. You can't just be saying any old shite that comes into your head. Speak clearly. Is post. If you're going to show something, post something and give us something to work with. Explain yourself. If you don't understand yourself, well, explain what you do and let's fill in the gaps. So that's really where I would like to go with the trade setups, is to get tight with it. We can still have the crack while we're doing it, but we just got to go to that next level of just, this is really serious in the sense of this is our finances, it's our financial freedom. Is let's make this work, because when you can make it work, it can work very well. So it's just anyway. I'm waffling, but you get what I'm trying to say.
Oh yeah, I like that.
Yeah, because it's growing stages. You have to test the indicators. You have to fumble around them. You have to try out other stuff. You guys have been doing that for a while now, and it's great. But if you keep doing that, you're going to end up just scooting along the surface, trying a bit of this, trying a bit of that. You're taking on some of this, you're taking on some of that. Some things are working, some things are not. Now we just need to sort of bring it all together a little bit more and trim the fat a little bit of, well, what ones work really well? How do they work really well together? And, let's not focus too much on anything else outside of that, and really bring everything that you understand cohesively together, which means you need to be focused, you need to be centered, and then you got to go a little deeper into how do I stay in a trade? How can I survive a trade? How can I test those ranges? So we really have to get into the strategy of being in a trade and the strategy of being in it and the mindset of being in it. So, like I used to be a lot more jokey in it. When I was doing my own TA, I was just in Marzell's in the XRP. Like I was the meme king. I was having a lot of fun. But then I realized that the more I do that, I actually have a lot of fun, but I'm distracting myself. And that I just found that, I can't joke like that all the time and then be serious about how the dollar costing, because they're two different energies. So I just found myself just managing my jokes a bit more so that I didn't pull myself out of, I'm focusing on staying in this trade and how to engage with it. And we need to get into that conversation more, and we need to get focused with it. So that's what I'd like to do, and I'm pretty sure that's what everybody else wants as well. So there you go. Anyway, so now let's get on to
Roy,
yeah.
we need to have I'm not sure myself, more of a risk how to manage your how to manage your funds more, kind of, because I stepped out, I was so worried. Yes, I understand that we have that section of the arc.
Yeah.
We could break out, and I felt okay. I made good gains. Let me step out. Let me clear my head. Make sure that things are going in that way, and then I get back again.
Yeah.
It's just managing the risk. If we can have sessions like that, like how we can manage it.
Yeah, absolutely. And there's no better way to do it than being in a trade and it's real. And that we're while we're doing sessions on it, yeah, absolutely. But also is that it more than that is that it becomes part of our daily conversation. You're in your trade. What's going on in your trade? What are your levels? How much are your dollar costing in? How much have you got in it? How much have you got left to put in it? What's the best way to use that in your situation? Well, then you need to tell me what your situation is so that we can start to look at the parameters. And if we're all talking about what's going on in our trades and what way we've come into it and what space we have to move in with regards our amount and our dollar costing, we can start to have that conversation as part of the normal everyday conversation. But we can't have that if there's conversations talking over each other all the time. And there's the swing traders, and then there's the scalpers, and then there's somebody going, oh, I'm doing this, and somebody else is saying I'm doing that. And it's a normal part of a discourse group. I'm not saying it's wrong, but what it blocks out are the more refined conversations that you're talking about. That's exactly what we need to be talking about every day. Every day. Or every day you're in a trade.
Yeah.
That's where we need to be. And as a trading group, that's what a real trading group would be at, so to speak. So you can see where switching it through to a strategy channel actually makes a lot more sense. Makes a lot more sense. So I totally agree with you. Is that conversation needs to come to life in the channels, yeah. So I can see as it develops that the setup channels will be all business, and if we want to have the crack is we go into the smack room, or you just go into you want to talk about your coin, go in and talk to your coin, bounce around, and then it doesn't really matter what you're saying there in the sense of, that's where you go and have your tea break, so to speak. But when we're in the trade setup is, what's your dollar costing? What's your levels? What way is the trade going? How far can you push it? Can we trust going that far? All that's in there, yeah. So So there you go. Anybody any other thoughts on it while we're here on it? It'll also bring people on. If you're new and you're like, Jesus, what are these guys talking about? Jesus, how am I ever going to learn this? You'll pick it up. There'll still be the basics. And I think I said this the other day. An advanced practice in anything is the layering of the basics. So I'll give you an example. Is you're mapping out the arcs. First thing you say is start working on your triangulation. Okay. Now, what's an advanced practice of the arcs? Well, it's the skill of getting familiar enough with them and doing them enough that they come to your eye, and that you're able to do the different timelines, and that you can layer the different timelines together. Now you're really getting into a much more advanced practice with the arcs, because those arcs, you can rely on the different timelines, and you can begin to map out confluence. So that's, but you haven't moved off the basics. You're still mapping out triangles. You'll never not do that. So when you start doing that at the beginning, again, we'll take you through it. You practice, you tease it out. It's part of the conversation, you know. And as you go along, you refine it. Okay, I want to start putting in my support and resistance lines. Yeah, we'll all be doing them every day. Okay, so again, you see it every day. You're in the conversation every day. It starts to make sense to you. Your support and resistance lines start to come easy to you. So you put your support and resistance lines in. There's a channel. Channels come in. There's an M. There's a W. That's the conversation that we're going to be in. What's going on in this arc? You know, and what way can we read it? Like it will become so feckin' simple. This is how smooth it's going to be. Look, we're broken into this. What are we expecting? Well, we're expecting an Elliott wave. You know, we can stick a fib on it from previous. Any ideas where it's going to go? Well, we can indicate it, you know. Okay, so let's get our entry points. We're in. Okay, let's follow this up. And again, we're looking for the W. There's the 3 scoops. There's the 3. There's the 4. You know, and 4 is coming up past the 3. Now we know we don't know how far this is going to go. So it could be taking profit at when 4 hits 3 again. And then we're dollar costing out until it hits 5. We'll do it on this one. We'll do it on that one. We'll do it on the breakout. We do the same thing on this one, the same thing on that one, same thing on the breakout. Rinse, repeat, rinse, repeat, rinse, repeat. You know, that's it. We're doing it over and over and over. It's not rocket science. It's the same thing over and over and over. And look, we have our level. Put our stop loss, our liquidation here and here. Okay, in we go. Great, in we go. Great. Put in a low one and let's dollar cost in. Okay. Is Roy, but what about all that profit I could be making? Okay, listen, you're starting with $10. You build it up. Now you're doing $100. Now you're doing $1,000. But you're doing $1,000 when $1,000 is what $10 used to be to you. But you're doing the same thing. If you get what I'm trying to say. So we can be like a really well-oiled machine. If you want to do the 15, well, you do the 15. Somebody else wants to do the hour. Well, they're doing the hour. We're still going to have the same conversation. You're within the 15 and I'm within the hour. We're still talking about the same space. You're in a smaller space in it. I'm in a bigger space in it. But the confluence of our conversations will support each other. The information you're giving me on the 15 is helping me in my hour. The information I'm giving you on the hour is helping you in your 15. Here's a 15. Is it going to go up or down? But the hour guy is saying, no, it's going to go up. But you'll know it yourself. But you get my point. There's a constant overlapping of the conversations between the different hours. And we're going to be recognizing confluence, or we'll recognize divergence. Oh, you're giving me something and I have something else. Why is that? What's the difference? Where's the space in between? Where do we meet in that? Or do we have to, is one more correct than the other? And how so? And that's the conversation that we want to be having. And it's very tight, it's very engaged in one space, and it's either up or down, and then there's a range. Now let's look and see how many indicators on either side, and then where's the tipping point? Where's the one that says, yes, look, it's more likely this than that? And whatever it is we have our strategy that lets us go in safely and test it. And we've got our position, and then we can start following through. over and over and over, over and over and over. So there you go. I think I'm very excited about it. I can't wait to have it that nice and tight and neat, and because we can relax into it, and then we can actually have a lot of fun. You know, is once we've got that conversation clear and tight and moving, it becomes very natural and easy. So there would be the levels that I'll be looking to get to, and that we can just enjoy our trading. Because like I sit here for hours a day, we all sit here for hours a day. This become part of our lives? It has to become a nice part of our lives, like got to get a bit of quality in it, if that makes sense. So that's an element to it as well as it goes along. Okay, so let's actually do the thing I said we were going to do. Yeah, here is the weekly arc. Yeah. So when it comes in, it's coming in from a breakout. I'll bring it down. I'll bring it down to the daily because it'll give it more. It'll give it more detail. Maybe the 4 hour. The 4 hour will give it more detail. There you go. Just more detail, yeah. And maybe I'll get rid of these for now. There we go. Okay. So it always comes in. The entry point of an arc is always the breakout of another one. When it's from the bottom, it's always one up, down, and down, possibly an up, a down, and out we go. A 1, hopefully a glorious 2, and then out we go. Okay? If it's coming from the top, there's an extra one because look, it has to come down, then come up and down, possibly another one, and out it goes. So there's always that when it's a breakout and coming down, there's an extra leg, and then you've got your impulses, yeah? So I gave these names when I wasn't familiar with Elliott waves, I wasn't familiar with fibs. You know, I had a bit of sense about channels, some patterns, support and resistance a little bit. That's the level that I was at. So these names are not what you would call official names. So I first recognized this Elliott wave as 3 steps up. That's what I recognized it as. So that's what I call it, yeah. There's 3 steps to it. 1, 2, 3. And always in the middle there's a retrace. So 1, 2, with a retrace, 3. And really it was the 1, 2, 3, 4, 5 of an impulse. So there's always 3 steps up. And then what does it reach? It reaches Skyline. Because I like to be a little bit poetic, this is Skyline. This is the top. Because and you can take this in, when you recognize this, why is it called Skyline? Because I realize once this is identified, it doesn't get broken unless it's a breakout. It just doesn't. Sometimes you'll get a touch to it or come really close to it. Sometimes you get resistance peak or mountain peak or even final peak coming up to it. Sometimes, but it's not the norm. But it doesn't get broken unless it's a breakout. Or, let me correct myself, sometimes a fake out. And more often than not, the fake outs are to the bottom than the top. You get a fake out here, it's like this, fakes out and then drops down. But it doesn't break this. A fake out to the bottom actually breaks below this, and then turns and goes up. But the fake out to the top doesn't really break this. There's very few breakouts, fake outs that break the Skyline before they turn. So think about what this means. It's a nice name, but I call it this for a reason. It literally is the Skyline. Nothing goes above it. As long as we're in this, nothing goes above this. So you can rely on that. Yeah, but Roy, what about the times that it does? Okay, how many times does it do it on out of 20, 30 times? How many times does it do it on a fake out or sometimes you get an ascending wedge where the mountain peak will be higher than Skyline, but when you look at it at the right angle, because you got to turn your head a little bit, you realize it's still, I know it's above it in price line, but in movement, because it's going at an angle, it's not above it. Conversation for another day. But my point is, you can rely on it. Okay, now what does it do after that? Well, it has its correction. And these are all out of sync now. Okay. So now is the first drop down is dead cat bounce. I used to put in dead cat bounce all the time. It's not necessary. You got a retrace and then you got the drop down. Okay, so you've got first spike, you got a drop down for a second spike, and then it comes back up for a resistance peak here. Okay, so now you got resistance peak, that this drop is really low. It comes back up for a resistance peak. So resistance peak is up here. Then you come down for third spike. Again, this is you wouldn't normally get this and then come up like that for resistance peak. This is the odd one. This is the odd part of this here, is that it came down like this, and then you got this big lift here again, and then a drop. Okay, so now you've got third spike. So you've got first spike, second spike, third spike. Is you have a resistance peak. So normally I would put resistance peak here. Okay, where I put it here on this one. So now after resistance peak is you've got the drop down, is you've got third spike, and then you have mid-range high. So look at this, you're going from Skyline to resistance peak, and what that basically means is that there's very seldom that price action comes above resistance peak. That sometimes mountain peak will come up and meet it. Sometimes it's above it, but very seldom. So while this is Skyline, resistance peak is normally the limit of where you get price action coming up to. Okay, and then as it drops down, you've got mid-range high. And the reason why I call it mid-range high is literally because it's mid-range high. And then after that is it comes down and you have double top. So you get this drop down and it comes into a double top, and after double top is you have the first drop. And the reason why I call it this is because these have a tendency to be spikes. Now, if I was a bit more familiar along the way, I would have called these wicks. But I didn't know wicks at the time. To me, they were spikes because there's more volume. So they spike down more. Okay, then here is double top, is because there's always it's like a double peak. Is you get the Elliott wave, you get the correction and it comes back up again and it creates a double top. And then you get the drop down for a first drop. And again, now you're hitting the bottom, and we're now heading up for mountain peak. And again, look at there's the 1, 2. Here's the push away. Here's the W. Here's the scoops. No, excuse me. Here's the W. Here's the scoops. There's another W in there. 3, 4, 5. Okay. So now it's come back up, and I would call this higher highs. You're getting a load of higher highs here. That's what you're looking for in the pattern. Is again, I don't use this as often now because I just know that, well, it's par for the course. It's higher highs. When I wasn't when I wasn't realizing this was an Elliott wave, is how did I know this was the common denominator? Well, there's higher highs moving along. So this was confirming this for me, yeah. But then there's mountain peak, because look, here's Skyline, here's resistance peak. So if this is the sky, this is the mountain. That's how simple I was doing it. Is this is the mountain, and again, what happens at the top of the mountain is always a drop, which is the second drop. It's always there. So from second drop is you get third drop. Okay, and then from third drop is you get possibly another wave, a final peak, a final bounce, and again is final bounce. You can either put it here, but really it's actually here. Final bounce is here. Is normally what happens is you also get a final retrace. So this down here will be the final retrace, and then the breakout. This will be the breakout. Over and over and over and over. Now there's tricky parts in this. This is a tricky part to read in this one, yeah. Even this here will be a little bit tricky, and it's not easy. It's not always easy to map out. This wasn't easy to map out when I was going through it, yeah. Excuse me. And this is on the this was the weekly. So this is run over a year, from the 28th of December, and right now 2020 to, where are we now? 11th of February 22. So we're heading into 13, 14 months. Probably 14 months by the time we're done. Now watch this. Watch this. This is going to be interesting. I am going to put on this a fib wedge. Okay, so you got to go from include all price action for the furthest price action away. Okay, so now see here. So X's strategy was figuring this out. He's basically said that about 30% of breakouts happen here, 70% happen here. So you can see it looks like we've got a little bit to go before we get the breakout of this arc. Okay, so the 236 is on the 16th of February. So I suppose anytime after the 16th of February, we're looking at the potential for a breakout to happen, yeah? Okay. So, so now is, if we look at that was the weekly. Now this is the daily, where I could take it through the whole arc here. Let me put it down to the 4 hour. So again, here's the breakout. 3 steps up. You can see I put in the Elliott wave, Skyline. The resistance peak is nice and high in this one. We get a drop down. Mid-range high is, I know within there's the first spike, second spike, and third spike. Again, I'm not going to go into the detail. I had to go into the hour to get them, so I just put in third spike. Is mid-range high, drop down for first drop, and I haven't put in again. Gonna have the double top in here. First drop, double top, and again we're on our way up, and higher highs all the way to mountain peak. So an Elliott wave up, A, B, C correction down, an Elliott wave up, and an A, B, C correction down. Okay. I've been changing these lately. Orange. There we go. So look, there's second drop again. Okay. Always. You'll see a drop coming down here. Second drop, all the way down here is third drop. Again, is the Elliott wave down. The ABC is final peak. Final peak. Final bounce. Again, let's see where this wants to go. So now there's an Elliott wave, and these two together are the weekly, and then separately these are the daily. And the weekly is running over what, 13, 14 months, and these guys have a tendency to run over 6 months. Okay, so now think about this. What does this tell you? That here's this one here, goes on for about 6 months. So now you're in another one. So what does this tell you? Well, this is going to go on for 6 months. So once this break out is, you know that you're going to have a wave, and look how high mountain peak came here. Remember saying to you about look how high there is. Look how high the resistance peak, mountain peak are very close to each other. You know, same here again. But again, they were the big volumes in there, yeah. So now you know that there's going to be this run for 6 months, and run for 6 months. Is how long is the next daily one going to run for when this breaks out? 6 months. Now, because this is going to be a bigger breakout, a bigger one, because look, we haven't broken the recent high or the all-time high. In fact, I think I've been putting my fibs, actually, this is very interesting. I've been putting my fibs, when I'm measuring the breakout of this one, I've been measuring this one and looking at what this tells me for the breakout. However, this isn't the highest peak. The highest peak is $3.33 or something. That's the one we should be putting the fib on, because that's the all-time high. Is we're not in breakout mode until we actually break the all-time high. But now here's the point I'm trying to make to you. Is what can we expect when this breaks out in the next year? Well, we can expect the first 6 months is going to be like this. It's going to be volume pump, woohoo! And the first month or two, well, two or so, is going to be this, and then the next 3 or 4 is going to be this. So first 2, Humpty Dumpty, and we go into a long bear trend. We're back into a bull trend, and then we're back into a bear trend, you know. And then look, it's calming down. And then we're in consolidation. We're breaking out again. So this is where, look, we did the same thing here, but it's at a lower volume, and we're into consolidation again. Look, you know. So now, what can we expect for the next year? Is one of these, but up here. We're looking to get up to at least a $4.50 for the next, maybe even more. You know, maybe even more, maybe even a lot more. But that's what's due in the next few months, and this is what's going to play out in the next 6 months. And then after that, somewhere in the summer, we'll be in this consolidation phase, you know, and then it'll kick off again. But what can we expect from it? Well, we can't expect it to break this, so to speak. We can't expect it to break this because we're in the yearly. This is the first wave. This is the second wave. Okay, in the 6 month, here's a wave, here's another wave, and then the correction. Consolidation, here's a wave, and then out we come. So it goes like this. Okay? So now is in the bear market, it would go quiet and it would float at a certain level. But we haven't had our all-time high. So we haven't broken out yet. XRP has not broken out yet. So what can we expect? We can expect a version of this, but bigger. What all the other coins have been doing that XRP hasn't done yet is still in front of us. Okay, so now what does that mean for the 4 hour? It's the same thing. I know there's a lot of stuff on the 4 hour here, but look, here's Skyline, first spike, resistance peak, you know, mid-range high, second spike, third spike, Elliott wave down. And sometimes it's not so bloody obvious, but mid-range always is, because when mid-range comes in, you got such a clear movement, body of movement here that you don't get in resistance peak. Mid-range is it. Excuse me. So look, there's double top. I didn't put in first drop there. There's a miserable first drop. Mountain peak, second drop, look, always there. Elliott wave all the way down to third drop. Okay. Now, here we are, up we come again, look at this, for final peak, final bounce, and breakout. Or, maybe we're going down. I don't think we are. There's final bounce there, because I was thinking we're heading down there. We got to see where this wants to go. There's a natural line, there's a natural long-term trend line that sort of comes like this at 50, 56. Is that it there? Or is it here? No, it's here like this. It comes and touches. I think it comes and touches off this. So it's like this. So there's a very, very natural line for us to hit. Somewhere anyway. I'll show you one of my other charts. But look, it's the same thing. So now we're working within this range. This is a descending wedge, yeah? But what can we expect? What can we expect in the next year? How many 4-hour arcs can we expect in the next year? 1, 2, biggie there, 3, 4, 5, 6. So the 4-hour arcs have a tendency to run anything from 6 to 8 weeks to 3 months. So how many 4-hour arcs are we going to get in the next year? 5 or 6. 6 here. Maybe 7, depending. So that's how many 4-hour arcs you're going to get. And you're going in cycles. Look, here's the volume one. Here's the up. Here's a sideways. Here's a bear trend, a bull trend, a bear trend, sideways bull trend, proper bear trend, sideways. Although this is all not tell lie. This is bear all the way down. I was reading it this way. It's actually this way. Here's the bear trend coming down. So now you'll see that we'll end up going in cycles where we're in for the bull, we're here for the bear, we're in for the bull, we're here for the bear. And that now the 4 hours are starting to separate those out. And once you've got it mapped, the top and the bottom, and you know this is descending, is now you're working in this space. So it's not going to be over here. It's not going to be over there. you know, as you map it out. And this Elliott wave that we put on here will help us guide us towards where the bottoms are. It's actually an Elliott wave already, or a fib, a fib already there. Look, it's telling us where the bottom is here. So we have all these indicators. Okay. But it's the same story. I know I'm repeating myself, and I'm repeating it because as much as I know this, I reinforce this in myself every day. Every day. I don't care how much I get it. I reinforce it every day because it just mesmerizes me every day what it actually means. What this means, to understand this. Is it difficult at times? Can you go wrong and you have to reset at times? Yes. But overall, what does it mean? This centers me all the time and gives me a guide that I don't recognize any other indicator that gives me such a guide as this. What do all the other indicators do? They support me in guiding me through this, helping me map it out so I can know the difference between, is it resistance peak? You know, is that first spike? There's mid-range high. It's helping me map it all out. But this is the story that I'm telling myself. And when I get these peaks, now I know what I'm working in. Now I know where to put my strategy to trade in this space. So it's amazing. It's amazing. So look, you can trade the 4 hours and you can trade these beautiful swings. Woohoo! Love it. Or you can come down into the hourly, you start mapping this out. I know you're familiar with this, but I'm telling you, I'm telling you now. Look at what it does. Look at what happened the last year. I'm telling you what's going to happen next year. Is it all going to have its own price action? Oh, absolutely. Yeah, we're going to map it all out. But now, how many 1 hour arcs are going to be in next year? Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 or so. Again, you're looking at anything from 3 weeks to 5 or 6 weeks. So now you could be, you see, there's that. I did this in here. See about this one here, about this turn and pop here. This is the scary part about where we are now. It turns and then up it goes. And here, I think it's a little bit different where, because this did its 1-2, it allowed for this. Because this didn't do its 1-2, 2 needs to happen. So therefore, we're getting this deeper drawdown. And I do believe, I'd be very surprised if it doesn't hit the 702. The 702 at 66.75. 66, 66, 67. It makes a lot of sense for the 1, 2, and then up we go. Gives a nice bounce to it, yeah. And I mapped this out from all the way back here. Here's the bottom. Here is the bottom of the bear market. Bear market, bear market, bear market. What's the lowest point of the bear market? Boom, that little drop there. And after that drop, that was enough. Everything from there has been up. So I think that this from here to there is the most realistic fib marker. When you're looking at the bigger time frame and the ranges, I think these two are the most accurate fib range, because it's including everything, and it's giving you those touch points. If I cleared all this out and you looked at it, you would see how accurately the fibs are working within these ranges here. So the 786 was the bottom here. You'll see there's an incremental lift through it. The 786 was the bottom here. You can see them here. The 702 came down low here is anyway. I think the 702 is going to be the bottom of this, I believe, or something very close to it. Anyway, so getting back to the point is all these guys. Look, you can go, I'm going to trade the hour. Well, what does that mean? Well, you're trading all these, and you're trading in cycles of 3 to 6 weeks or so, or more. Yeah, maybe 3 to 6. Some are longer, some are. You see, these are shorter and these are longer. Yeah, but now you're trading in this cycle, and you're trading the swings in this one. Okay. or you can come down into the 15 minute. Now I know you know all this, but I think it needs to be spelled out. Spelled out. Look at all this. Look at all these 15 minutes. Get that out there. Look at all these trading potentials. That's not 15 minutes. Look at all this. I was mapping them all out. It takes so much data. This is why I stopped doing it like this. And I just take one, and I keep bringing the one and rolling it over now, because believe it or not, all these take up so much data on the page. Yeah, it can slow the computer down. But each one of these is a 15 minute, all mapped out, And again, is you can trade these, and you're trading in this cycle, and then a breakout. What happens at the end of the every 15 minute? You got a breakout. You know, what's your prize at the end of every arc? A breakout. So you get to trade the swings, and at the end you get to trade the breakout. You get the bonus package at the end. Then you go in for the swings, and what happens at the end of it? Well, you go for the next bonus. So if you're doing that in the 15 minute, what's this? The 20th of September to the 29th. So there you go. So like there's 9 days. So let's say from a week to 2 weeks. So every week to 2 weeks, you get to trade the breakout. And then you do the swings, and you get to trade the breakout. So if you're trading on the 15 minute, is again, you might have a trade a day, or sometimes every other day. And at the end of it, you get to trade the breakout. Woohoo! And you go, maybe I want to take a break. Maybe I don't want to trade this whole one here. Maybe I'll just go in here and I'll just let it ride. And I'll take it easy this week, because I know this one is going to be something like a bear flag. So there's going to be lots of volume. So why don't I just go in here and I'll take it easy this week. But look, I'm making money all the way. You know, let me catch the swings here, because now we've got consolidation at the top. We're getting symmetrical triangles here. It's great to swing trade here. Okay, that will be a challenging one. We've got to get into our TA to catch that fecker. And they'll become 3, 4, 5. So you can center your lifestyle, your pattern, your rhythm, your timing all around this. You make this work for you. You know, and then you go, look, here's a biggie. Here's a 4 hour. Fuck it, I'll go in on the 4 hour. I'll do my 15 minutes. But what I'll do is I'll get in here. I'll do 2 trades. I'll drop one in here, and I'll just let that puppy ride all the way to the top, and I'll catch it. But while this one's doing its passive income work for me, is I'll swing the trades here. I'll do these swing trades all the way up. I'll also trade the breakouts. And I have this little one all the way traveling with me as we go along. That would be a goal that I'm looking towards. And I'm focusing on the longer trades at the moment, because I want to crack those. So I'm not distracting myself with the swing trades, because I want to crack catching these, you know, and being patient with them and following them through. So ultimately, I want to do both. Catch this, go all the way up, and swing trade this. You know, and to have nothing, an income to it, that when I see the way something's going, sure, I'll just stay in for all this one. And I'll swing this one, you know, and I'll move and adapt with price action and the way it's being played out. So we all have our own way we can find in it, our own unique pattern in ourselves, what works best for you. The time you have, the energy, the space, how much money you want to earn, you know, whatever it is you can work it into the pattern. You know, if you want to swing more often and do lots a day, well, let's go down into the 5 minute. Let's even go down into the minute. If you really want to do scalping, let's go into the minute. And you'd be scalping, you'd be popping in and out of trades all day long. But what does every single one of them have? Well, every single one of them at the end has a breakout, which is the beginning of a new arc. And it's either at the beginning of it's either going to have 3 steps up or 3 steps down. you know, so you're going to have a skyline. You're going to have a resistance. You're going to have a resistance peak. You're going to have a first spike. I'm not going to repeat it all. A second spike. You know, here we are having a nice drop down. I might even suggest you see this is this here? Is this mid-range high? That's the question. Anyway, talk about it a bit. I think this might be just a retrace on the way down. So my point is you're mapping it out. So one of the things that would be great is that the more we get used to this is if you named one of these points and you talked about it on the 4 hour or the 1 hour or the 15 minute, if we're all familiar with it, is well, we all know what you're talking about. I don't necessarily need to know, you know, what's the price action or whatever. It's just if you say, well, I'm focusing on Mountain Peak, I'm looking to go in on a short. I know exactly what you're talking about. I know what part of the strategy you're on. Even if you're on a 15 minute, I'm on a 4 hour, and you go, look, I'm on Mountain Peak, I'm looking to go short. I know your strategy. You know, I know you're at the top of an Elliott wave coming down for an ABC correction. I know you're looking for your second drop and your third drop. If you go to Mountain Peak and say, I'm going on a short then, one of my questions for you is, do you know where third drop is? Have you measured your third drop? What does it look like? So you can see how as a centering in all our indicators and our trading strategy, this is amazing. This is gold dust to be able to understand this and map them out. In our communication is we can name these points. You tell me where you are on one of these points and I'll tell you where you are in your strategy. It's that easy. It's that simple. Because if you tell me that, look, and I've gone in on a short on Skyline and I'm on second spike, you know, oh, okay, so how's mid-range high going for you? It's halfway through. Or it's just about to do is lift before it drops. Oh, very nice. You know, I know exactly where you are in your strategy. Have you dollar costed in when it hit that peak there? I did. Oh, very nice. Okay, because now it's moving away with volume. Great place to dollar cost in. Sure, we're all dollar costing in there. Because we know to do it there. You know? Everybody get the idea? Anybody, any questions? No questions? Okay. Okay, so I pretty much said everything I've got to say, and I've said it actually lots of times. And I've done that for a reason, because I'm reinforcing it. But what I'm showing you how I reinforce it in myself. I'm showing you my attitude towards it. I'm telling you how I understand it and how it all comes together. And what it does is that it gives me the ability to look at a large amount of information and hold it in a simple form. And it's a Pictionary form. It's very visual. And then it has touch points, you know, which allow us to begin to identify where we are within the pattern and where we are within the strategy. And if we all had that, if we were all clear on that in ourselves, you understand how smooth our trading would go, how clear our trading would be, and also as a group. We can have a lot of fun doing it. And then the more eyes on it, the better. I might miss something that you see, you know, I'll get something that you miss. And we're all keeping ourselves tight in it. So that's that's why I set up the Academy, because I would like to have that experience with you. It'd be great fun. Okay, guys, have a great day or evening, and give me a couple of days into next week, and I'll have the new chat room set up, and we'll try them out and see how they go, and we can adapt and adjust it as we go. If we need to make more rooms out of it, that's not a problem at all. Sure, it'll show itself. We'll know that when it happens, if required. Yeah. Other than that, have a great day, and I'll talk to you very soon. Cheers.